Welcome to the deep dive. Today we're taking a closer look at Bitcoin spot ETFs.
Yeah, there's been a lot going on, hasn't there? We're going to examine all that recent activity.
Exactly. And figure out what it signals for the whole cryptocurrency market.
We've got the latest data ETF net asset value.
Right, the NAV. Basically, the Bitcoin they hold minus liabilities.
Mm-hmm. Plus inflow and outflow numbers, market cap,
Right.
the whole picture.
And our goal, really, is to cut through the chatter and give you a clear sense of how institutional money is impacting Bitcoin right now.
Yeah, exactly. We're digging into the numbers to see the real trends, not just the headlines.
Okay, so let's dive in. The first thing that really jumps out is this sustained inflow momentum.
Right. 7 days straight of net positive flows.
And yesterday alone was pretty big, wasn't it? Like $591 million?
$591.29 million, yeah.
Right.
And that's just one day.
Wow.
What's really striking is last week's total. About $2.9 billion in net inflows for the U.S. spot ETFs.
$2.9 billion in a week.
Uh-huh. And get this, that's the 5th largest weekly inflow ever in Bitcoin terms.
Okay, 5th largest ever. That's significant.
It really is. It suggests, a real shift in how institutions are looking at this. Maybe more positive regulatory vibes lately.
Or just broader acceptance, like seeing Bitcoin as a portfolio diversifier, sort of like digital gold.
Could be both. This level of consistent buying, it speaks volumes.
So this steady institutional buying pressure, what does that really tell us about how the big money views Bitcoin's future long term?
Well, it strongly suggests growing conviction, I think. Seeing Bitcoin as a legitimate asset class you need in a diversified portfolio.
Right. And these aren't likely just quick flips, are they? Institutional plays are usually longer term.
Exactly. And remember, this is happening while Bitcoin's market cap is already huge, around $1.87 trillion.
And Bitcoin dominance is still high, over 60%.
Yeah, about 64%.
Yeah.
So these inflows are happening into an already pretty strong market context. It adds weight.
Okay, now this is where it gets really interesting, I think. Looking at the individual ETFs, BlackRock's IBIT, it's just dominating, isn't it?
Absolutely. Yesterday, $970.93 million in net inflows. Just for IBIT.
Nearly $1 billion
Yeah.
in one day.
It's pretty remarkable. And if you zoom out, their total historical net inflows are now $42.17 billion.
$42 billion. Wow, that really highlights their lead in this space.
No question, they're way out ahead.
So why? What's making IBIT so attractive to these institutions?
Well, there are a few things, probably. First, the ETF structure itself. It's familiar territory for them.
Right, they know how ETFs work. It's comfortable.
Exactly. And it wraps up all the tricky stuff, custody, taxes, operations into one package. Makes Bitcoin exposure much simpler.
Plus, it's BlackRock.
Yeah.
Their reputation, their reach, that has to count for a lot, right?
Oh, absolutely. Their distribution network is massive. They can plug these ETFs right into existing wealth platforms. That gives them a huge leg up in attracting serious institutional money.
It really feels like IBIT is becoming the go-to vehicle, doesn't it, for mainstream institutions wanting Bitcoin exposure?
The accelerating inflows certainly point that way. Seems like it's cementing its position.
Okay, but on the flip side, there's ARKB, the ARK Invest and 21 shares ETF. Different story there yesterday.
Yeah, a very different dynamic. They actually saw a big outflow, $226.30 million leaving the fund.
That's quite a contrast to IBIT's massive inflow.
It is, but, context matters here. ARKB still has a really substantial total historical inflow overall, like $2.88 billion.
Okay, so it's not like it's collapsing.
Not at all. And they'd actually had some strong weeks recently, too, pulling in over $3 billion not long ago. So this outflow follows some good momentum.
So you've got IBIT pulling in almost $1 billion and ARKB seeing over $200 million walk out the door on the same day. Like the market's starting to consolidate, picking winners.
It's a strong possibility, yeah. We often see that in maturing ETF markets. People start favoring the biggest, most liquid option.
Liquidity being key, right? Being able to buy and sell large amounts easily without moving the price too much.
Precisely. Institutions hate moving the market when they trade. High liquidity usually means tighter spreads, easier execution, all very attractive.
So the big outflow from ARKB while IBIT booms. It does suggest maybe investors are gravitating towards those larger, maybe perceived safer funds.
It certainly looks that way. It might not be anything against ARKB's strategy itself, just market dynamics playing out, size and trading ease becoming more critical.
Yeah, the natural evolution of a new market space.
Right. And it raises a good question for you listening. Beyond just size and liquidity, what else might make you choose one Bitcoin ETF over another? Fees, tracking error, the issuer's reputation.
Good points. Definitely things to think about. Okay, let's zoom out again. The overall Bitcoin ETF net asset ratio, it's now at 5.83%. What does that number tell us?
Yeah, this ratio is super important. It's basically the slice of Bitcoin's total market cap that's now sitting inside these spot ETFs.
So almost 6% of all Bitcoin is now held by these funds.
Pretty much. And that translates to a total net asset value for these ETFs of $109.27 billion.
Wow, over $100 billion locked up in ETFs. That's a significant chunk of the market.
It really is. And as these ETFs gather more and more Bitcoin, well, what does that do to the market overall?
That's the question, isn't it? What are the ripple effects?
Well, think about it. A growing portion of Bitcoin supply is being absorbed by these long-term oriented vehicles.
Wait, they're buying and holding mostly.
Which could potentially act as a kind of structural price support, maybe,
Yeah.
by reducing the amount of Bitcoin readily available for trading the free float, as it's called.
Ah, right, the Bitcoin that's actually moving around on exchanges versus the stuff tucked away.
Exactly. So if ETFs are locking up more supply, it tightens that free float.
And as that ETF net asset ratio keeps climbing, that could really amplify Bitcoin's scarcity narrative, couldn't it? And maybe impact how prices are discovered.
That's definitely a key potential consequence. Less freely traded Bitcoin could, in theory, make the remaining supply more sensitive to demand changes, potentially more upward pressure.
Interesting. So scarcity increases, price potentially goes up.
That's the theory. But you also have to consider, does this concentration in ETFs affect volatility or the market structure in other ways over time? It's complex.
Okay, so let's quickly recap the main points here. We're seeing steady, significant institutional money flowing into Bitcoin ETFs.
Yep, consistent inflows.
BlackRock's IBIT is clearly leading the pack, attracting huge sums.
Dominant position, for sure.
We're seeing hints, maybe, of market consolidation around the bigger ETF players.
With that divergence between IBIT and ARKB, yeah.
And this rising ETF net asset ratio, almost 6%, now means these funds hold a meaningful and growing slice of the total Bitcoin supply.
Which has potential implications for price and supply dynamics down the road.
These are all really interconnected pieces, aren't they?
Yeah.
Showing how traditional finance is increasingly weaving itself into the Bitcoin story.
Absolutely. It's a fascinating intersection to watch.
So as we wrap up this deep dive, here's something to chew on. With almost 6% of all Bitcoin now parked in ETFs, what does that mean long term? For Bitcoin's core idea of decentralization, for access by regular individual investors.
Yeah, it's a big question. This institutional hug could really change the landscape. How will these trends play out?
Definitely something to keep thinking about. Thanks for joining us on the Deep Dive.